So welcome. One of the reasons we're having the webinar tonight to talk about what you can do with your money for CRRSA, ARPA, and the quality funds is I know a lot of you are confused. And we threw a lot of money at you in a short period of time. It's sometimes hard to tell what it looks like when it comes in. And so I hope tonight that we start to clarify that and help you figure out where you can allocate that in your books and your spending and the reporting requirements. As I said earlier, at the end of this presentation, we will have time for questions, which accounts for why I'm going to talk pretty quickly and move us through this pretty quickly. So first of all, tonight, obviously, we're doing our greetings and introductions. We are supported this evening through Child Care Aware by the lovely Donna Lake, who you can thank for not only getting this all registered and getting us all signed up. She's handling the recording, keeping us on task. She'll help with questions. So Donna has been a close part of our team all through the pandemic, and we greatly appreciate having her with us, and especially giving up her evening. I appreciate it. And I only wish we were doing something really fun and exciting as opposed to talking about how to spend more money. So what we're going to go over is the COVID funding sources. And I want to put a little caveat on this, that CCDF quality incentive money isn't actually COVID money. That's money that we have every year that we spend out of our child care development block grant money. And we had money left over and we don't want to leave it what's called on the table. So that was an extra little bump that we hadn't counted on. We'll talk about that. We're going to talk about CRRSA, ARPA, the reporting timelines, and then, of course, your questions. So let's get started. What was the COVID money? COVID money, first came the CRRSA money back in 2020, and that was money that came through GOFER, which was the governor's office, and that was what was called CARES Act money. And that was really focused on survival. It was to keep people in business. It was to keep employees connected. It was basically the emergency. Then we evolved into CRRSA. CRRSA is the Coronavirus Response and Relief Supplemental Appropriations Act. It was still dealing with income losses, trying to keep people stable, trying to keep people in the business, and as well as help. As you recall, if you can think back, it just all blends together that we were certainly dealing with a lot of we started obviously having inoculations, but we were still dealing with a lot of COVID outbreaks and things like that in the spring of 21. Then came ARPA, which is the American Rescue Plan Act. And for New Hampshire, it came in two parts. We've got the ARPA Stabilization, which is what all went to you all, and that was specifically focused on providers. And we were quite proud of ourselves in New Hampshire. There were 6 states that within 6 to 8 weeks of getting the award and the thumbs up, and it takes a while. You get an award letter, you don't get the money right away. We had the money going out the door. Some of our colleagues were still struggling well into 2022. And it had to all be encumbered by September of 2022. So we were proud of you all for responding. We were proud of ourselves for figuring out how to get it out the door. And as you know, we got pretty good at it as a team, you and us in the state. And then all supported by our partners out there like Child Care Aware, who really helped, and across who helped people walk through that application process. The second piece is the discretionary money. And the discretionary money is money that we haven't spent yet. We have until 2023, September 2023 to encumber it, and 2024 to spend it. And it has some really cool projects in it. Things like a family child care project to help expand and establish family child cares, as well as create cooperative systems to support all of you out there. There is a workforce and also employer-focused project, which is going to not only look at, hey, what really works to get employees in the door, keep them. We're also going to be tapping the employers in the state as well as their employees and non-childcare and saying, how do your people find childcare? What do they need? What can they afford? So on and so forth, as well as some other pieces in that whole project with piloting various programs. We've got a GSQ support that's in there, which is also equally as exciting. The coaching, the support, materials, things like that. We have what's called infrastructure, and you all, I think, will really like infrastructure. And this was really built around some experiences that Marty Ilg and I had in the field, where you can participate voluntarily in what's called a business health check, and you come in and you assess through self-analysis, not something that we know, but you analyze how your business is doing and where it's doing fabulously and where you might need some help. And then you're provided with expert advice, and such as, if you need legal advice, if you need tax advice, HR advice, facilities. There's also some funding in there to do repairs and restorations. Now, bear in mind, we can't pay for full construction, but we can pay for a project manager. We can pay for, you're replacing the windows, or you're building a new wing. We can't build a new wing for you, but we certainly could pay for the windows and, the shingles and all of those sort of things. So it's got some neat ideas. And so we're really going to be clever and think through that money. And we've already started, we're looking, fingers crossed. You love the state system, it's slow. We're looking at getting those contracts out in early spring. So I will keep you posted on that. Then our third batch of money, like I said, was that non-COVID quality money. That's the one where you got the survey that said, hey, if you want some money, tell me fast and we'll get it to you. And that was allocated out. That is part of our quality discretionary money. It has similar spending criteria to some of the other COVID funds, but it is really quality focused. What they're asking you to look at and tell you is, hey, how'd you improve your quality with that money? And I know it wasn't big money, but a very little bit helps. So it's, again, we'll talk about sort of the uses. Now, how did it appear in your check? This was one of the first confusions. First of all, some people said to me, I'm on direct deposit from the state stuff. Why am I getting a check? And I will tell you that the technical and elaborate answer to that is I have absolutely no idea. And that's just what happened. So you either got a check or a direct deposit, and on the remittance advice, which is that comes either with directly with a check or gets mailed to you, it will say some of these things that will give you a clue. If it says ARPA S, R1 or R2, in some cases R3, that means the ARPA stabilization money, and it was round 1 or round 2. If it's CRRSA, it should say CRRSA, but the other thing to remember is to look at the amount that you got for CRRSA, go back and look at your agreement, because we also paid for absent due to COVID with CRRSA money. So for example, today I got an email from somebody and said, I got a CRRSA check and the CRRSA check was for $1,300, but I already got my CRRSA award money. I don't understand what that CRRSA check was for. Well, that CRRSA check was for their absent due to COVID billing. And if you have questions about any of these, the best thing to do is shoot me an email in the ECCP mailbox. Tell me if there's a transaction number on it, what the amount was, and if there was anything on the detail. And that will help me figure out for you what the money was for if you can't figure it out. Then there's one that might say CCDF DISC or CCDF discretionary, and that was those quality funds. Now, here's the other part of it. If for some reason you haven't gotten, and everybody should by now, so if you haven't gotten a check, something's happened. It's either gone awry, or for some reason I processed through, and they still speak to me through finance in 1 week, over 1,200 invoices. It was actually like in 3 days. And they did it, and to get it all out by September 30th. So it didn't mean the checks all got mailed by the 30th. It meant they all got processed by the 30th. So if you still have not gotten one, and I know I've heard from a couple of you, and we're in the process of researching that and getting that taken care of. It doesn't mean that you're not going to get the money. It just means that we need to track it down. One of the first things I want you to do before you reach out to us is go into your state vendor account if you have any question about what the address was on your state vendor account, because that's the only place they can mail the check. So even if a check is lost, they're still going to have to mail it to that. So you need to go into your vendor account and change the address if that's not the address. And that's something that people forget. So what was the timing? So most of these, I think you remember, American Rescue Plan. We got notification that we got it back in the spring of 2021. You can spend it on things from January 1st, 2020 to September 30th, 2023. And it was awarded during the summer and fall of 2021. We had a few of you that somehow fell through the cracks that got funds after or in 2022. You still have the same reporting requirements. You just don't have some of the earlier quarterly reporting requirements. Coronavirus was right before ARPA. As you recall, that was in the spring. That was our first time that we got to do a grant application on NHCIS. That counts for allowable expenses between March 1st, 2020 and September 30, 2022 is when you had to have that spent by. Those grants came out late spring, early summer 2021. That is the only one in this group that can be used for income losses. So keep that in mind. And we'll talk about income losses in a minute. And then there was the CCDF discretionary one. That was the one, like I said, that we sent an email that I said, urgent, please, please, please fill this out immediately. And 600 and some odd of you did, which was fantastic. Everybody in all child licensed and license exempt facilities and child cares were eligible in the state for that. And that went out the door really quickly. It had to be out the door by September 1st, 2020. And you have until September 30, 2023 to spend it. My gut feel is you will all have long since spent it well before then. So now let's talk about the timelines. This is the one I emailed you. I've updated it a little bit. So the CRRSA final report is going to come out at the end of the week. Bear in mind, and I always say this, remember when I say close of business, it's the Diane Chase close of business, which is usually like 11:35 at night. So don't panic if you don't see it in your mailbox by 5 o'clock, because I tend to send them out later in the day. It's not due till December 9th, and it is going to include a questionnaire and a spreadsheet. And all of these will have the same sort of format. I am not looking for your individual invoices. You do not need to scan and send me the invoice from Home Depot that you spend it on XYZ. What you'll get is a spreadsheet that says in different categories, how did you spend the money in this area? And so you'll say, for example, we spent $25,000 in staff wages. We spent and you'll say we spent this amount in wages, this in benefits. We spent money in this area for supplies. I don't need to know every crayon. You can say, the disposable, we spent disposable supplies, art supplies, playground equipment, that sort of thing. And you're going to break those down with general numbers. Bear in mind, that's just what I need to report up. It is your obligation to keep those records, because if the Fed shows up or the state shows up or IRS shows up, they're going to say to you, so what'd you spend the money on? Show us the receipts. So my suggestion is, as you do your spreadsheet, what I would do is either an electronic or a physical accordion folder, or however you keep your documentation, and say, this is what I put in there. This is, if I have $10,000 worth of materials and supplies or COVID related safety and health expenses I used in CRRSA, then make sure you throw either a copy or the actual receipt in that file so that somebody can ask you later. If they ask you later, you'll know exactly what it is. But again, I don't want your receipts. I don't need to know if you bought your gloves from WB Mason or if you bought them from you know, Walgreens or Amazon. That's between you and the IRS. So that is all you're doing is documenting how you spent it and in what areas. The questionnaire will ask you things like, what was the impact? And did it help you do this or that? One of the things to keep in mind is that CRRSA, like I said, is the only one that lets you do income losses. So make sure that when you're doing your documentation, that you talk about how you arrived at your income losses, and that you be able to back that up in the event that you've been able to be audited. So for example, income losses, we'll say Chase's childcare. I usually have 100 children, but I didn't in 2020 have 100 children. I only had 25 children. So I had a deficit of 75 kids. That would be 75 families that would have been paying me to care for their children to the tune of X dollars. But you can't just say I would have had 100 children. You have to be able to show that you had that number of children, whether it, and usually the IRS looks at 3 to 6 months. So you'd say in the fall of 2019, or in 2019 is what they're going to look at. What was your income in 2019 versus what was your income in 2020? Now, for those of you who just bought into a place or opened a new place, either right before or at the beginning of the pandemic, and I know there's some of you out of there, you're going to have income losses. And income losses didn't stop, as you know, they didn't magically stop like in the spring of 2021. In many cases, you're still having COVID-related income losses because you're short-staffed, you can't get staff, which was caused by COVID. So people say, what can I do with the income? Is it when I have that money? So let's say I'm reimbursing my center for the loss, the income loss, then am I restricted in what I can do with that money to the list of allowable uses? No, the allowable use is the income loss. So if you, as many of the directors out there, and I'm preaching to the choir here, I know a lot of you took a pay cut or a pay hit or reduced or didn't take an increase, all of those sort of things. If you reimburse yourself, that's fine. If you let families slide and didn't charge them, but you paid for their share out of either your salary or something else, you get to reimburse that to the center. So again, if you have an accountant, talk to your accountant what this looks like, but make sure, the big thing we always say is make sure you can back it up. That's all you're doing. If somebody who called me the other day and said, I put $10,000 on a credit card during COVID and to pay for things in the center because we didn't have the income. I fronted my program, which she owns, $10,000. She can reimburse herself for that $10,000. She just needs to document what the $10,000 was spent on because it's all allowable uses. Or she could put it as, she could document her income losses and then put that money towards reimbursing herself. So it's either way. And again, talk to a professional. I'm not your tax person. I know it is a taxable income, so you want to make sure that you've got as many expenses in there as you can. So CRRSA, that's all you're going to owe us is the final report. It's pretty down and dirty. We'll be having a webinar to introduce how to do it. There'll be our partners over at Child Care Aware, at Across, as well as our team will all be able to provide you some support as you work on that. It's not meant to torture you in any way. It's just the accountability for the Fed. So if you run into problems, you're not bothering us by asking questions. The only thing that we ask you to do is read the FAQs that'll be posted, as well as follow the directions before you reach out to us. And after that, don't hesitate. Also, when we send out that report, we're also going to be posting and sending out what's called the NOAA, which is going to have the federal ID number on it. That's the notice of award. Those of you who have accountants very often have to have that number. So we spend a lot of time finding that for people. Now, ARPA was a little different. ARPA, they wanted lots of reporting because they gave out billions of dollars across the country. And so that had quarterly reports. Some of you did your quarterly reports, some of you not so many. So at this point, what I'm doing is I'm consolidating the data, resubmitting, and will reach out to each of you if I either don't have your quarterly report or don't have some information. Some of those things on those report in CRRSA, ARPA, as well as the quality dollars are what we call compliance information. I'm not asking them. For example, in ARPA, they're looking at diversity. So they asked ethnicity and they asked gender and things like that they hadn't asked in the past. I thank all of you for answering those. It was really helpful to them. And it's helpful to us because when people don't comply with those, we have to answer why. And we usually just refer to the license plate, live free or die, but that doesn't seem to always appease them. So, so I'll be reaching out to you individually about those quarterly reports. We did make an error and we misunderstood in the reporting requirement, which was, we weren't the only state. We assumed that when they asked us each quarterly report, what are you spending your money on? You might have gotten a check in September, but you didn't spend that money until December. We assumed that you would then still be reporting in that quarter what you spent the money on. That's not what they want to know. What they want to know is who got money, let's say in October, and spent it between October and December. But if that, so our question, all of us to the federal government was, well, what about if I got my money in October, but I didn't spend it till January? Don't you want to know what I did with it? And they're like, no, we just want to know that when money's going out, people are spending it. So, honestly, the big thing they want to know, did it go out? Did it go out to the right people? And did they spend it on the right stuff? And so that's what we're looking at. Also, just a reminder, those of you who received ARPA-S and CRRSA, you need to do your updated program profiles and your updated staff profiles. And we bumped the date out for those program profile updates. You should be updating those anyway, because that's your resource and referral conduit. But we bumped it out to December 31st because we're hoping, we've gotten our new contract. We're very excited to help us with NHCIS's tweaks, and we're hoping to be able to have some really fleshed out things in the program profile that we'll be able to use instead of having to do that market rate survey every couple years, that we'll be able to get that updated from all of you on an ongoing basis, and therefore be able to have that rate information, use information, all of those sort of things much more available and much more frequently. Also, the staff profiles, that's having your people go in and fill out their staff profiles completely. So just remember that you agreed to that. ARPA has 2 final reports. So ARPA, the first stabilization final report, it's due December 27th of 2022. It comes out November 7th. But it is, if you haven't finished spending your money by December 27th, it's not due until you finish spending your money. This is the only one where you're really going to talk about your money and you're going to, what categories you spent it in and that sort of thing. So any time between now and the end of the spending period, which is actually September 30th, 2023, you can report what you did with your money. My suggestion is, having been a director and having tried to go to school at the same time I was a director and not having a lot of time, and I know you folks are out straight, I'd get it done as quickly as you can so you can get it off your plate and not try to remember it. So that will come out. Then next year, one will come out, and it'll probably come out before September 5th of 2023, but I don't want you to complete it and really complete it until September. A lot of the impact and anecdotal stuff you can, but we're looking for statistics that are relevant during that last month of the project. And that's not about the money. It's about what was the impact going forward, those sort of things, and kind of where you are now. Both of those, same thing. The first one, the ARPA Stabilization Final Report number 1, will have the spreadsheet. There will be no spreadsheet with the ARPA Stabilization Final Report number 2. So, and if you discover something in between before October 6, 2023, that you put in that first final report that wasn't accurate, or even in the final report number 2, don't panic, just reach out and say, hey, I need to make some changes, and we'll make some changes. So we're not the IRS, and this isn't, we're not going to say, oh my gosh, No, I'm sorry, you put it in. This is going to trigger an audit. No, that's not the idea behind it. The idea is that in December, I turn around and do what's called a QPR, Quality Progress Report, and I am required to tell the federal government what you all did with your money, how it's going, what was the impact on quality, as well as I have to do that again in December of 2023. Some of the information that you're going to be putting into that second report is also going to be really helpful as we start to look at the new CCDF plan, which we will have to produce by the summer of 2024. So that's our, what the Bureau of Child Development and Head Start Collaboration, that's what we operate on. It's our blueprint, if you will. And so the input that you have on that is immensely helpful, as well as all the surveys that you all have done and the one that's out there right now. The last chunk of money is that CCDF quality funds final report. Down, dirty, really small report, short spreadsheet. How'd you spend the money? What'd you do with it? And how will it impact quality? Now, this is another one. You'll note the due date isn't until next year. But as soon as you finish spending the money, you can complete that and submit it. And there's no follow-up for statistics later. Now, what are the content? Like I said, there's 3 reporting categories. The expenses or the use by category. There's the demographic and programmatic data. And then what's the impact? How did the money positively impact? And we're also going to ask those questions where we say, where do you go from here? And where are there still deficits? And God forbid there's ever be another pandemic. What could we have done differently? What could the federal government have done differently? There's also the reporting tools. Like I said, it's a spreadsheet and a questionnaire, and the additional priorities that the federal government and we as the state are looking for, as well as everyone who will be able to read the reports. And by the way, the final report that we put together is aggregated data. You may be familiar with the term. Aggregated data is the combined data. So it will talk about in terms of areas of the state, and it will talk about, terms of spending and impact. It will not identify you individually. However, I do want to say, remember that all of what you got for your award amount is public information. So that somebody can ask that and they can get a copy of that. We haven't published it, but it certainly is out there if people want it. And it is, but we're not going to report that, all of those items that you fill out on the many reports, we're not going to report those by individual person, but we'll report it as aggregate data. They're looking at information about the impact on your workforce, impact on quality, and sustainability. Bear in mind, any of you who are joining us who have either sold your center or going to sell your center or have closed your center still are obligated to complete a final report if you got and used the funds. So how do you plan for those allowable uses? The first thing you want to do is, we know you've been spending money for the last 2.5 years, but step back and before you start your documentation and say, where should I strategically allocate this? Where is the best use? Should I put it in staffing? Should I put it in here? Should I put it in there? Did we use that money to leverage certain relationships? We got PPP funds and we got this funds and this funds. What does that look like in the reporting? Another one is make sure your spending plan was evolving and responsive. As things changed, as they evolved. I mean, remember that foolish idea we had that the schools were going to open back up in September of 2020 and things would sort of go back to normal. And so obviously we course corrected at that point. Also take a look about how some of the other funding sources factored into what you did. Again, PPP, absent due to COVID, the disaster money. One of the things you want to make sure is when you're figuring out how to allocate your expenses and the uses that you didn't double dip. So just make sure that you didn't say, oh, okay, well, I used, I'm trying to think where you might say, okay, well, I paid for the playground equipment through a nonprofit grant for this, and then you also put that you paid for the new playground equipment through ARPA. You can't do that. It's got to be each one into a different category or a different use. And think long term when you write it down. The idea is that you have multiple expenses. You're thinking about how this money impacted your ability to stay afloat, expand, hang on, not hang on. Those are all important messages, but also how did it help you to invest in the future? And in some of the lessons that they learned, they're looking for some of the things that you all have been so generous in sharing, like, hey, I learned I needed to downsize this, or I learned that, if I put out the call to my parents, most of my parents, this is one I got the other day, many of my parents are not able to help because they're either financially strapped or they're in such occupations that they can't get time off to come, they work Saturdays, they work nights, things like that, to come and help in the program. So what are the allowable uses? I'm not going to go through every single one of these. Remember in the email that went out, there was a summary. They will also be posted online, but these are some of the big areas. Big thing to remember with that CCDF quality allowable money, that or quality money, is that it's CCDF discretionary on your on the remittance information. If you have infant and toddlers, 10% of whatever you got for the grant has to go towards serving toddlers. And there'll be a place on the spreadsheet as well as a questionnaire to say what you did. Now, as you can see, I mean, for example, in personnel costs, if you paid for your infant and toddler teacher with this money, that is definitely a use of that 10%. But any of these areas, or one of these areas, nothing says that you have to spend money in all of these areas. I do want to remind you that you, in your initial application, you said, this is where I think we're going to spend our money. You are not tied to those because things change. So if you said, oh, I think we're going to spend 25% of our money on personnel, and we're going to spend 10% of it on mental health, hey, things change. So I have that list. So whatever you turn in, as long as it falls into these allowable uses, that is absolutely fine. So don't worry about, you will get a copy of that when we get some admin help to start pulling those, but you are not bound to those. That goes also when we jump over to ARPA and CRRSA, particularly with ARPA, what you put in your operating budget. You said we spend this amount on staff, we spend this amount on rent, so on and so forth. You're not obligated to spend them in those areas. You can spend all your money if you want to in staffing, but it is what you needed it as long as it falls under the allowable uses. Just keep in mind, none of this money can be used for major construction. So adding a new wing, you can buy things like, let's say you added a new room. Well, if you bought cabinetry, you bought windows, you bought flooring, that's all allowable, but you can't pay for the construction of that. There's very, very tight federal requirements around construction. CRRSA is the only one, like I said, for income losses, and they had to be directly related to COVID. What wasn't related to COVID for income losses in 2020, 2021. So if you have any questions about that or how to document it, again, we'll be covering it in the webinar, but also don't hesitate to ask us. You can use it for staff expenses, cleaning and safety supplies, services that were related to COVID. For example, a lot of you had extra cleaning people come in. You certainly all bought masks and hand sanitizers and things like that. At some places, some of the things that people did were, for example, added a secondary door so that they would have a door between where families dropped off their children and where they greeted families. That would fall under some of the operational expenses, program supplies, all of those related items. Now, in terms of operational expenses, think you can pay standard operational expenses, but also think about documenting how it relates to COVID. For example, if your operational expense, your electricity, we all know the cost of electricity and water and everything else went up during COVID. So, for example, if you jump back to cleaning supplies, they don't pay for toilet paper, straight out toilet paper, but they pay for that new increase. And I know a lot of you might have paid $100 for a carton of toilet paper in January of 2020. By the time that June of 2020, if you could even get it, it was $250. Well, that $150 is extra expenses. So that can also count as well. ARPA stabilization. Remember the staff expenses. Remember that you have an obligation of 25% of your grant need to be used for recruiting and retention of staff. Now you can put all your money in staff. That's fine. But 25% of it was recruiting and retention. And you can be clever about that. That's included that the differential, for example, that you gave in people in raises or bonuses might include the extra staff that you had to bring in because you took your preschool class and divided it into one larger room, and now you divide it into 3 tiny little pods. So you needed extra teachers or extra hours. You might have spent it on marketing. You might be paying out signing bonuses. Any of those things count towards that. And the other headings are pretty traditional operational expenses. One of the things where we're getting into a little bit of question and we're exploring it is people want to know if they can repay their PPP loans with this money. And I honestly don't know the answer to that, but by the time we have the webinar, we will know the answer to that. The idea behind this was, as I said, to move you from holding on to stabilization. So take a look at how you spent that, and did the money and the use of the money, did it keep you going, and did it help stabilize your operation? Now, why is it important? Well, it's immensely important in a number of ways. And one of the things that we found out going into COVID very, very quickly was that we really, really lacked data in this state. We had a lot of anecdotal stuff, but we didn't have data. And that's also why the survey that is out right now, which I know you all are way overworked, but it is a critical survey that we've been asked to supply from various places to give that information. It really is informing the same things we have here, which is how we're going to use funds in the future that we get, how we're going to write and implement our CCDF plan now and in the future, partners and collaborator participation. When we get information on your reports, your quarterly reports, your final reports, and those surveys, it lets us tell people that are interested in supporting the childcare field, hey, these are things that are working. This is a place where we have dollars, and these are things that they need. And I would not presume, and neither would any of my colleagues presume, to speak for you. And that's why surveys and reports are your voice. It informs support to providers and families. What do you need on a day-to-day basis? What do families need? It creates a link to employers across the state who have employees that need childcare, and say to us, how can we better support the childcare field so that our employees will have access to childcare and stable childcare and come to work. It also provides information and context to the government and other stakeholders, legislators. Not a week goes by where somebody, either in state, federal, local government, doesn't reach out and say, do you know? Do you have any data on? Can you tell us about? And so it's a critical piece of what we're doing. And so these reports, spending the time to really think about it and share your thoughts, your input, and how it's impacted it, will not only bode well for the current administration and the current economy, but also as we look to the future. Because one of the questions that will be asked anytime in the future when we have a crisis, what worked and what didn't work, and why should we do this again? So what are the next steps? So what you need to do is you need to plan and organize your information, do a draft of your final report, review it. Whether you're reviewing it with your accountant, you can review it with one of the technical assistance people that will be available, and say, is this what I want to do? Unlike our previous ones, we are not going to do this report on SurveyMonkey. We're going to be doing it. You're going to literally get a Excel spreadsheet and a questionnaire that you will fill out. You can either type into it or you can write into it if you have readable handwriting. And that way it'll give you time to ponder it. You can make lots of copies of it. You can tear it up, light it on fire, whatever you need to do to get it done. Once you've drafted it and review it, then you want to assess and refine it. Does it say what we did? Does it answer the questions? Do I feel it is defensible? If somebody said, did I use the money the right way? Then you're going to do your analysis and you're going to report it. And that means you're going to send it up. And like I said, the good news is they're coming to me and I'm assembling the data and we know each other. And like I said, we did it today on a project where we transposed some numbers and we were like, oh my gosh, we have to reach out and tell who we reported this data, we flipped these two numbers. So this is not, I don't want you to feel like, oh my gosh, I've turned it in and now that there's some sort of black mark because I forgot to include something or I needed to move something around or I had a question. We've got some flexibility. So that's key. We're all in this together. So my job is then to take your information and put it into a comprehensive report that goes to our leadership. They take a look at it. I get a thumbs up from them, and then we can submit it to the federal government. So going forward, like I said, there will be a webinar for each one of these report templates when they're launched. That'll be both recorded and you can sit through them. We're going to produce FAQs and post those as needed. And then if you have any questions tonight that we're going to talk in a minute, we have a couple minutes for questions, or you can just email those questions to ECCP. And like I said, the 31st, the 2 reports come out, and then on the 7th, the other one comes out. So it's a lot of work between now and the end of the year. Take your time. And I just want to put the caveat, as we always do, if something happens in your family comes first. So please, please, please reach out and let us know that there's been a crisis and that you're unable to meet a deadline, and we will work with you to make sure that we can still get what we need and that you have the time that you need for family and friends accordingly. So I'm going to stop our recording there and thank all of you for coming this evening. And then